We invest in real estate and the stock market because both have been proven consistently to be ways to build wealth.
Yes, everything we've researched or anytime we've tried to figure out, hey, what are people doing to consistently be richer? Real estate and stock market has always been at least in the top 5. What's up, Legacy Builders? I'm Rob.
I'm Reshawn. And this is Learn, Hustle, Grow.
She's a stock trader.
He's a realtor.
And we are debt-free investors. If you've been following us so far, then you know that at the end of 2018, we left our W-2 jobs. And in 2019, we traveled the world for a full year.
We focused on debt paydown and long-term investing in order to achieve financial independence. On this channel, we're sharing our version of life after corporate America.
Since leaving our jobs, we have more time to watch the markets and constantly learn.
Basically, we're always talking about the stock market and real estate. In this video, we decided to let you guys in on that conversation.
Right.
Let's start with the question that everybody is asking. Mr. Lee, are we in for a real estate crash?
Well, according to the World Property Journal, that is a no. Definitely. I mean, being that real estate is selling off the shelf all over the United States right now, they're saying at least till the end of 2021, they don't believe it's going to be any kind of crashes whatsoever, if even after then, right?
Okay. So they think we're the market's going to remain strong.
Yes. And they also think that the interest rates are going to move by the end of this year.
Wait a minute. Wait. Now, the Fed came out and said previously that rates were going to stay low for at least 2 years.
Right.
Are you saying they think they're going to go back on that?
Yes, they think that they're going to change it. So I guess we can only wait and see, right? They think if it does not happen by the end of 2021, it is definitely going to happen in 2022. Rates will be moving. So.
And I know we've talked about this before. I think the reason they are considering raising interest rates is because of inflation.
Yes.
Right? We are really seeing the greatest inflation at the grocery store for us.
Yeah.
Right? We don't have a lot of big expenses, but every time we go to buy a bag of wings, we are getting less and less, fewer and fewer wings for our money.
Yes. We used to have she'd say, hey, dinner's ready, and it'd be 6 wings on my plate. Big ones too, y'all. And then I would save she'd say, you got 6 left after this. And we eat our little, what do you call those?
Leftovers.
The fries.
Oh, yeah, sweet potato fries.
Sweet potato fries with it. And
yes, that's a regular meal around here at the Lee House.
So we know we got
hot wings and sweet potato fries.
Right. So then I know I have 2 meals out of this. I have 6 more wings. And the other day, she called me with a whole bag of wings, and I got down there, it was only 5 wings on my plate, so.
Yeah, it was so bad. Kroger gave us a 2.5-pound bag of wings.
Yeah.
I didn't realize it was only 2.5 pounds at the time because the bag was $11.99.
Yeah,
and so I thought
insane.
surely this was the bigger bag.
Yeah.
So that's one of the ways that we are feeling the pinch, and we figure you guys are probably seeing that too if you are grocery shopping.
On one positive note, though, so the inventory has been extremely low, and
that's the positive.
Well, that's not the positive. The positive is inventory is improving, right? Just as a realtor, I noticed that the houses were flying off the market 2 to 3 days, they would be under contract super quick.
Okay.
Now, I mean, it's not much, but now I've been seeing them slide all the way up to around 10 days, right?
Okay.
Within, 10 days or 2 weeks, sometimes they're on the market and they, so inventory is improving. So it's dropping, no, but improving so far.
When you say dropping, no, you mean prices are not dropping.
Yes.
Okay, so I'm saying that's what I see as the potential buyer, right? When I'm looking, just because since he is realtor, I get to see, homes on the MLS, and I'm checking out a couple of things just in case there's an opportunity for us to find a new investment. And I don't feel that there's an improvement in the inventory, honestly.
Yeah. So
a lot of you may be like me if you're in the DFW market where you just can't really find what you want. There's stuff out there, but it's not what you're looking for.
Right.
But because we're involved in other, Facebook groups and other organizations, where people are talking about finance and real estate, I do see that markets have cooled off in some cities.
Yeah, they're cool in low money. I mean, the thing is, we're just so far in the hole with houses that are needed, that's the struggle. So
yeah, and I think we mentioned previously that in the last recession, a lot of home builders went out of business.
yes, a lot of home builders went out of business, and then the rest of them stopped building, and that's what's put us in the situation we're in now. If everybody stopped building, they said they were, I was listening to a news interview the other day, and the lady said she worked for a builder, and she said, we were just building them as needed. And if they build them as needed, then they're going to be behind when a big push comes for need. So now they're saying technically in the U.S., we're 4 million houses in the hole. We need 4 million houses just to catch up in the whole U.S., of course, right? So it depends on state by state.
And let's say you are a builder and you're ready to get your inventory up. You want to build, but now there's a shortage of everything, right? We are still dealing with all the issues that came from the pandemic supply chain issues.
Yes.
So lumber was an issue at one point, but it might not be lumber, right? It might be nuts and bolts. It might be flooring material. It might be, paint.
Smart home stuff. I mean, everything. They got everything. So.
And then let's not even to mention labor.
Yeah.
Right. Depending on where you live, some people who would have normally been, working in the construction market have found other jobs.
Yes.
Or in some cases, they've left the United States.
Yeah. They got better. They got more choices too, right? Because everybody needs them right now, right? So.
Yeah. If you were working for a home builder and then you turned into a handyman during the pandemic, when everybody was sitting at home, fixing their houses, wanting everything upgraded and refreshed, you may have found out that you could make more money on your own.
Yep, indeed. Another thing that's keeping Texas real estate strong is the migration from out of states. Plenty of people are coming here from California, some from New York,
Don't let these new laws by the governor scare y'all.
No.
Come on to Texas.
Yeah.
This whole thing is a plot to keep you away.
Yes. And what was the other thing? The other thing is, millennials. They said the average millennial is turning 30 this year, right? So this is usually like a prime home buying age, right? So that's why
everybody wants to start a family.
Yes,
right?
so that
Which
means houses are going to be sold. People are going to be still looking for houses.
Okay.
So, yep.
And guys, just because you get married, it doesn't mean you have to buy a home. No. As a matter of fact, experts advise you to wait at least a year because you're under so much stress with the wedding and everything. And you need a little bit of time to get to know each other. Don't rush into buying a home. So I can completely see how that expectation that you need a home as soon as you get married is going to drive a lot of home sales in the market.
Yes.
Now, let's talk about the fact that this forbearance program is coming to an end.
Yes.
If you guys are keeping up at all with the economy, then you know during the pandemic, there was a mortgage forbearance program put into place.
Yes.
And some people have not had to pay their mortgage for over a year now.
Yes. And sounds like a lot of people took advantage of this and stacked their money too. So the question is what?
Will there be foreclosures?
That's what we hope, right? And that is,
no, that sounds terrible.
It does sound terrible, but for us investors, I'm saying, honestly, this is a great time to sell. I'm just gonna say that. If you think you're gonna lose your house, just sell it, man, and you can always bounce back later on because we're getting way over market value right now.
Anywhere from 10 to 30 offers per home.
Yes. I know it stinks, and people wait till the last minute. We always talk about this. People wait until they're getting pushed out of the house, and then they try to sell it when it's already foreclosed or whatever, and then you got to file bankruptcy or whatever, and you've lost the house. You could just sell it, get the money plus some, and even if you break even, and then later on, come back, revisit buying another house, right?
Now, when he says plus some, he's saying that he's seeing houses listed for their actual market value, but they are selling for how much over asking?
Some of them, 50,000. For the between 25 and 50,000, almost. It's averaging around 25 now. Here it's ridiculous, and some of them in the nicer areas, like the Plano, the Frisco, the Carrollton.
Collin County and Denton County have appreciated drastically.
They get up to 50,000 over asking, and they don't even need a
appraisal.
Appraisal. They don't even want appraisal. Say, forget it. We'll take it. 50,000. That's ridiculous, right? But the question was, you said,
are we going to see foreclosures? Right? Yeah.
This is the thing. I believe we will see a ton of foreclosures because not everybody can, pay for these big old houses, right? But the problem is they're saying that the
market will just eat them up.
It'll absorb them. It will absorb the foreclosures because there's such a high demand right now. But that will level things out even more, right, and make things back more back to normal, right?
I mean, the market's all about supply and demand. Right now, we have way more buyers than we have sellers.
Yes.
So if a foreclosure was to happen or a wave of foreclosures were to come, then there are enough buyers on the market right now, including investors, to even things out.
Yep. All that to say, based on my research, there will not be a market crash anytime soon. I know we would all like one, us investors, I'm saying. But no, because we are so much in the hole with the homes that it's probably not going to happen, right?
Okay.
We'll see. But hey, enough about real estate. We need to talk about the stock market. What are you seeing and doing in the stock market, babe?
All right. So for those of you who've been following our 2021 journey, you know that we have a $5,000 a month income goal as far as stock trading is concerned. Well, so far, so good. The math is $5,000 a month comes out to $60,000 a year. And even though we've missed a couple of months as far as our monthly goals concerned, we are still on track to achieve that.
Good job. Good job.
So, as far as the market overall, you guys may have seen that August kind of ended on a low. It kind of fizzled out, and the reason for that is because of the jobs report. The stock market relies heavily on economic news, right? We're all investors. As individuals, we want to know what's going to happen in the economy before we, make a stock purchase.
So, wife, I noticed that in our July and August videos, you have a lot fewer trades than you had earlier in the year. What's going on with that?
Well, like we said with real estate, the market is about supply and demand. And there's a lot lower volume, which means a lower supply during the summer because there are traders who take the summer off.
Okay.
Right. So that slows down the market and it makes it harder to reach your trading goals.
Okay.
Also, of course, the stock market responds to economic news.
Yes.
And, there are all kinds of reports that come out regularly, like the Fed's reporting on interest rates, the jobs report.
Yeah, I was going to ask about what's up with the jobs report. How's that looking these days?
Well, the jobs report is crazy. It turns out that there are like over 10 million jobs available in the United States and only 8 million unemployed.
Wait. Okay.
Yeah. So they are saying that there are a lot more jobs available than there are people to do the work currently. And at the same time, ADP is reporting an increase in payroll, which means that the people who are working are getting paid, making that money.
Wait. So why would it be 8 million versus 10 million jobs, right? Like, why people? I know we talk about this off camera all the time, but
that is
they say those are low end jobs, right?
Well,
they say it's McDonald's and stuff, right?
Well, this is the deal. There is a lot out there about these being jobs that people don't want to do.
Yes.
A lot of the
Labor.
jobs are in restaurant and services industries.
Yeah.
At the same time, there's some speculation that unemployment has kept maybe some younger people from going back to work. Those people who would have worked in these industries without an issue, but now the upgraded unemployment, the pandemic unemployment benefits has led to them making more money just for staying at home.
Right. That's got to go away though, right?
It is gone.
Oh. Okay, so now since the unemployment benefits and extra bonuses and everything's going away. It just went away, right?
Yeah.
So September. It just went away. Okay, so now maybe more people will start taking those jobs that are paying more money. Hopefully they don't bring those salaries back down, right? You got to get in while you can. And then the market will start moving more, and then you can make more trading money, right?
Well, historically, lower unemployment has meant a better economy because as investors, we anticipate future growth for the corporation. Yes. I mean, think about it. If more people have jobs, then more people are going out to spend and the company makes money on the back end. Okay. So that would be the ideal situation. But honestly, as investors, a lot of people are confused right now with the conflicting information.
Mm-hmm.
There are more jobs available, and still people aren't going to work.
Yeah.
So you'll probably see some people sitting on the sidelines, especially here in the month of September, because historically, September is one of the worst months in the stock market.
Okay. Seems like it would be, to me, since June, July, August is already kind of low. Seems like one of those would be the lowest, but you say September, huh?
Yeah,
Wow.
so July and August were slow, but then for some reason September being one of the worst months. And I think they tie that to the fact that it is the start of a new quarter, and a lot of people have decided to take profits and sell off. Whenever there is a sell-off in the market, that drives prices lower.
Yeah.
So certainly it's a buying opportunity for a lot of people.
Okay, well, good to know.
Well, we're in the month of September now, so I can't predict the future.
Yeah.
What I can say is that it's extremely beneficial to understand how to read the charts so that we can all figure out for ourselves what's the best time to get in and the best time to get out.
Right.
In the meantime, we'll all just have to wait and see what happens beyond this month.
Indeed.
Yes, this is what conversations in the Lee household are like.
Yes.
Rob Lee is a full-time licensed Texas realtor. So for those of you considering a relocation or interested in investing in the state of Texas, he specializes in the DFW market, working with sellers and pre-qualified or pre-approved buyers. If you are in need of a lender referral, please send Rob an email. We'll include that information below.
Yes. Also, if you are looking to get into the Trade and Travel program, we'll leave that in the description below.
Now, Trade and Travel, for those of you who are new to our channel, is the course that we took in order to learn how to read charts and to start figuring out how to learn to trade for income.
Yes.
See you in the next video.